Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Citic Resources Holdings Limited annual report. Citic Resources Holdings Limited is a diversified investment holding company that operates in various sectors. At its core, the company engages in the exploration, development, and production of oil and coal in several countries including mainland China, Australia, Europe, and other Asian nations. The company's business operations are divided into four main segments: aluminum smelting, coal, crude oil, and import and export of commodities. The aluminum smelting segment is responsible for the operation of a Portland aluminum smelter in Australia, where alumina is sourced to produce aluminum ingots. In addition to aluminum production, Citic Resources Holdings Limited also operates coal mines in Australia and sells coal in various markets. The crude oil segment explores, develops, and operates oil fields, with sales primarily focused on Indonesia and China. The company's import and export of commodities segment is a significant contributor to its revenue, as it exports various commodity products while importing other commodities and manufactured goods. Citic Resources Holdings Limited also engages in alumina refinery, financing, oil technology development, and property holding activities. Furthermore, the company provides consulting and management services, invests in bauxite mining, and trades in oil and gas. With a presence in multiple countries and a diverse range of business operations, Citic Resources Holdings Limited is a significant player in the global commodities market. Citic Resources Holdings Limited maintains a market capitalization of $4 billion, broadly in line with the industry peer group. Citic Resources Holdings Limited trades at a lower price-to-earnings ratio of 0 times and a lower price-to-book ratio of 0.48 times relative within the industry. This makes the stock appear attractively priced. However, the broader industry is also trading at low valuation levels, suggesting sector-wide pessimism rather than the company-specific undervaluation. Further evaluation is required to identify if the company worthy of investment, or could it be an extended period of low valuation or a value trap. The company maintains a moderate leverage profile, with liabilities making up 35% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 5.56%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified through an analysis of the key factors that have contributed to the fluctuations in revenue over time. Revenue growth has been driven by several key factors, including the expansion of trading business and investment in new markets, technological innovations such as water shutoff extraction technology, and a significant increase in aluminum prices due to supply constraints and robust demand. Additionally, the group's diversification into commodities trading has led to substantial revenue growth, with a 91% increase in commodities trading revenue and an 82% increase in segment results. The group's geographical markets have also played a crucial role in driving revenue growth, with significant increases in mainland China, Australia, and other Asian countries. Furthermore, the group's sales and purchases of goods and services with state-owned enterprises have contributed to revenue growth, with $75.4 billion in 2025. On the other hand, revenue decline has been driven by factors such as natural decline of existing wells, decreased average crude oil realized price, and increased repairs and maintenance costs. The reversal of provision for impairment in 2024 also led to a decrease in crude oil and bitumen production, contributing to revenue decline. Additionally, depreciation and amortization have increased, while interest income has decreased. Overall, the group's revenue growth or decline can be attributed to a combination of these key factors, which highlight the importance of market trends, technological innovations, and geographical expansion in driving revenue growth, as well as the impact of natural decline and operational costs on revenue decline. The company's financial performance indicates a consistent generation of positive operating cash flow. The data from various pages confirms this trend, with net cash flows from operating activities being positive for both 2025 and 2024. Additionally, the operating cash flow before interest and tax is also positive in these years. Furthermore, the operating cash flow status is explicitly stated as positive on page 148, and changes in working capital accounts suggest a likelihood of positive operating cash flow. Overall, this suggests that the company is generating sufficient cash from its core operations to meet its financial obligations. The company's financial health has undergone significant changes in the past year. A notable increase in debt level is evident, with total debt rising by 73.2% from $11,520 to $3,483,421. This surge is attributed to a substantial increase in bank and other borrowings, which have risen by 80.2%. Furthermore, non-current liabilities have also seen an increase of 55.4%. The company's interest expenses have mirrored this trend, with interest expense on bank and other borrowings increasing by 23.2% and total interest expenses rising by 28.6%. Conversely, interest income has decreased from $28,527 to $20,524. These changes indicate a significant shift in the company's financial obligations, which may have implications for its future performance and stability. The company's performance varied across different segments. On the positive side, the coal business unit showed improvement with a decrease in rehabilitation costs on page 100. The import and export of aluminium also performed well, with increasing segment revenue and results on pages 102 and 104. In contrast, aluminium smelting was a weak point, with a significant increase in revenue but a corresponding decrease in profit by approximately 15% on page 10. The coal segment also struggled, experiencing decreasing segment revenue and results on pages 102 and 104. However, the crude oil commodities smelting segment bucked this trend, showing increasing segment revenue and results on pages 101, 102, and 104. Management is emphasizing the importance of two key drivers for growth: investments and trading. This dual-wheel approach will enable the company to expand its core businesses while also pursuing new opportunities through strategic investments and trading activities. The company is committed to leveraging technological innovation and operational efficiency to drive growth and improve performance. This includes investing in research and development, particularly in areas such as reservoir management and water shutoff extraction technology. Management is also focused on cost reduction and efficiency enhancement through lean management practices. In terms of specific business initiatives, the company is prioritizing steady production and reserve growth in its core oil and gas business. It is also making significant breakthroughs in its trading business, with a focus on expanding market value and providing real-time information on industry dynamics. Ultimately, management's goal is to position the company as a leading resource and energy-focused listed company, delivering long-term and stable returns to shareholders. This will be achieved through a combination of consolidating existing core businesses and pursuing dual-wheel expansion through strategic investments and trading activities. The company's financial strategy has included a commitment to rewarding its shareholders through regular dividend payments. This approach demonstrates a focus on returning value to investors while also maintaining a stable cash flow. According to the provided information, the company has indeed paid dividends, with further details available on page 137 for those seeking more specific information. That concludes the financial summary for Citic Resources Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.